The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now. What's up, traders? This is Vee Trades, and today I'll be doing a technical analysis breakdown for the Spider S&P 500 ETF Trust with the ticker symbol SPY. If you want a chart analysis guaranteed to be done, please read the description below. Also, take a second to give the video a like and subscribe for more chart analysis. I appreciate it very much. This video is for entertainment purposes only, does not constitute any financial advice. I will first go over what I see in the daily chart and finish the video off with the weekly chart. So here we have the daily chart for the SPY. I believe last time we did the analysis was back here on September 11th. And it looks like Monday was a nice gap up, and we were expecting right around that 415 level to be hit, which could have acted as resistance, and I think it did because it's a supply zone. So whenever you see these large moves and prices come back to where that move started, it could do the same thing again. So if we mark a kind of like a rectangle, this is like the supply zone, so whenever prices enter it, we could get the same move down like we did in the past. And on the ES, which is the futures for the SPY or the S&P 500, there was a wick into this supply zone, and prices sold off. So it looks like Tuesday was a massive gap down, trapped in a bunch of longs, and we started even going lower after that too. So let's take a look at what's going to happen next. Well, there was this micro uptrend channel in play, but it's probably not going to be in play any longer because we just ignored that. There was this potential channel right here. Show you guys that right now. This was a potential channel. I didn't think it was fitting because we just blasted right through the EMA right over here. So that's not the best looking one either. So basically, since we got back below EMA, it looks like we're going to be continuing lower. Especially since we went below this horizontal line right here at this 390 level. You can see that price action is respecting it very nicely. Sometimes it finds some type of support, sometimes it finds resistance. So right now, since we went below it, when we come back up, we could find resistance and then continue lower. So that's what I think we're going to do. I think we're going to see a little up move probably the next couple of days because we are far away from the EMA. We're expecting a pullback and come fill in this gap that was created on Friday. So we could see up move in a few days, but I don't think we're going to get back above the EMA and then continue. Yeah, I think we're going to do it fairly soon because the aggressive sellers are back in the market. Looks like they want to bring the market down very quickly. So if we get a measured move, this looks like one complete leg down. If this was the correction right here, the target is right around the 367 level, which can be reached in the next couple of weeks, and that's right back where we started in June. So we could probably make a new low of this entire downtrend. And it looks like this channel was definitely in play right here because we had the break of it, and normally when we get the break, we usually go back down to the previous candle inside the channel, which is right over here, and that's what it looks like price action is doing. Overall, we're kind of just in a choppy downtrend, meaning we have these wide swings up and wide swings down. So this is what makes it kind of annoying because it takes a long time to play out. You see that we had a high point in the market at the beginning of this year, and it's already been several months. We just still been going down, versus in 2020 there was a high point and then we came back to that high point several months later. So there's a very quick recovery, unlike here where we're still going down. So this could drag out for the remainder of the year and probably even a good amount of the next year. So what I'm doing personally, just saving as much cash as I can. Cash gives you options, even though you will hear some people say that cash is not good in inflationary because you're losing the value of it. But the thing is, the things that you want to buy, like stocks, bonds or whatever, or crypto, they're all falling in value. So your dollar or your purchasing power is actually getting stronger just holding the cash. It's basically you're going long on the dollar and riding up that strength in the dollar, and eventually when it reverses and the equities start going up, then you kind of want to start putting it into equities. As right now, it's kind of the opposite. So it's basically just sitting and waiting and holding cash, your purchasing power is increasing when you want to buy these equities. So instead of buying something at $20,000, when it drops to $10,000, you can buy 2 of it now. So the buying power is actually increasing in some aspects. Obviously, other things like food and housing, it's getting worse, but in stuff like this, it's getting better. So that's why cash right now is probably the best area to be in. Even though everything seems cheap, it can definitely get cheaper. So technically, this looks like a slow, choppy downtrend. It can last a long time. You can already see that back here in June, there was the low of the downtrend. It took like 4 months just to come back over here. So it's a very slow trend. Eventually, it probably will reverse. But as right now, I'm looking for lower price targets. Right in the short term, we're going to see probably a pullback. Find resistance at that 390 level, which I believe we can, and then probably just still continue lower to make a new low of this downtrend. So we'll have to wait and see if this yellow one is actually the one traders are going to be respecting, or once we make a new low of this orange one, are we going to reverse? So we'll have to wait and see. But as right now, we're probably going to continue lower. So that's all I have for the daily chart. Let's go and wrap it up on the weekly chart. So here we have the weekly chart for the SPY. And before I go on the weekly chart, let's take a look at the DXY, the strength of the dollar relative to other currencies. This is a massive uptrend, so it's getting stronger and stronger by the week. Definitely not trying to pick a top here, and I said looks like prices are trying to reach the 120 level because that's the measure move target. See, this is all pretty much one leg right here. We had pretty much a 2-legged correction right here, one leg down, second leg starting the formation of this impulse up. It's right around the 121 level, 120 level, and that also coincides with the previous high point back here at the beginning of this century. So everything makes sense that we should continue higher. And also, if I connect the swings, it looks like there's this potential uptrend in play, and we're very close to a sell-off point, meaning right around this 112, 113 level. We could just break it and go up straight, but we could see a pullback or some type of short-term relief fairly soon. But it looks like it's going to continue higher until we reach this 120 level. So basically that tells me that equities are going to be hurting. So let's go back to the SPY. Here's the weekly chart. This was a very bullish sign that we shot right through the EMA, but we cannot hold it, which I've shown you guys multiple examples of, that we need to bounce from the EMA. Once we break above it, like we did in the past, that would mark the bottom. But right now we just did the same thing we did back here in March, where we got through the EMA, we cannot hold it, and after we cannot hold it, prices just sold off sharply. So basically the same thing over and over again. We need to see price action stay above the EMA, not break down through it. Now this week was very bearish, pretty much a lower high, so it shows strength for the sellers. So it looks like we're going to be making a new low fairly soon, probably next couple of months. I expect this 360 level to be reached once again. Next target would be a possible measure move down. If this is all just one leg right here, they might try to reach that 315 level. So basically everything still looks bearish. I would not be trying to buy anything right now, even though everything is kind of cheap. Better just to wait in cash. Me personally, that's what I'm doing, and eventually you will have another opportunity to buy again. So that's all I have for the SPY. Thank you for stopping by and checking my video. Make sure to check out the rest of the channel, since you might be surprised what you can learn. Leave a comment down below on where you think prices are headed. Also share the video if you want your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel, since I want to deliver great content to you guys. See you next time, and bye.